How are we getting on, people? Luke here from LAGFX. Welcome back to another Sunday Sessions video. Sorry for my absence last weekend. I was actually away on travels, celebrating my birthday, but we're back again now. And we've got some good pairs to go over this weekend. So we've got the Euro JPY, the Euro USD, and the AUD USD. On screen at the moment, we can actually see this was a trade that we placed on Friday, so just yesterday. I found an unmitigated area from this push lower, this leg down, an area that needed to be cleared in order for price to continue moving lower. As we can see, price actually trailed back up during its retracement, its higher time frame retracement, tapped into our POI and has since delivered us with bearish structure. I believe this bearishness will continue, breaking this low here, so confirming further bearishness, as we've already had a displacement in this retracement here with a break of structure. So we just highlight this. So this in itself confirms a continuation in bearishness fractally. Obviously, if we have a break below these lows, this would confirm bearishness longer term, which is what we want. So we have our take profit set here, just above these lows, as this is the lowest point price could come to before taking a leg up if it was to actually reverse, if the overall trend was to reverse. But obviously we did our top-down analysis and our overall bias was to be a seller in the market anyway. So what are my goals longer term for this pair? Well, as we can see, we have a long way that price could go. So this is my final target. This is something I really want to be able to capitalize on, a very longer term short position. As we can see, we're looking at about 303 pips. And I think this is more than achievable. A break below this low here would just confirm a higher time frame continued bearishness, and that is exactly what we want. So if we zoom out a little bit, we can see how it was just the last low that was set. So now that we have tapped into this POI, I believe we will see a continued amount of bearishness. So we could realistically move our take profit down to here. I'm not going to, as we are more than happy with 17 RR. You know, we're looking at over 30%, 34% returns on this trade, which is amazing. But nevertheless, we can look to continue to capitalize on bearish selling positions throughout our trading experience and throughout the coming weeks. I am looking to be a seller longer term in this market. As we can see, the overall structure of this market is very much bearish. We have just had a distribution take place here, and we have all the confirmation we need for price to continue moving lower longer term. This being our higher time frame final take profit target. Okay, so moving over to the Euro US dollar, we can see how we have our swing low set here and our swing high. So this is good, as this gives us a region to work within. And we have done our overall top-down analysis on this pair, and it is predominantly bearish. Go and check for yourself, have a look on the day time frame. If in doubt, zoom out. Look on the week time frame, and you'll see that the overall structure of the market is very much bearish, so we want to be sellers in the market. Now, what does that mean for our current position and what's going to happen next? Well, we can see how this major swing low point, we actually saw price tap into that. Now it failed to break below, which tells me that the bears are struggling to confirm and continue bearishness moving forward. So what I believe is going to happen is we are going to have a wider scheme retracement to an area that has been left unmitigated. So what we could do is look for areas of unmitigation, and we could also use the Fibonacci retracement tool. So marking our swing high to our swing low, this actually gives us a Fibonacci box that we can draw out. You've probably seen me do this 1,000,001 times, but we'll just do it again. This gives us an area or a region that price could come up to before deciding to move lower. So if we just highlight this as the fib box, and then what we can also do as well is just have a look throughout this leg down if there's any areas that have been left unmitigated. So we can see how this has all seemed to have been mitigated. That's fine. Yeah, that's okay. And as we can see here, actually, this has been left unmitigated. So what we would do is we would highlight the last buys to sell, bring this across, and as we can see, it actually coincides with our fib box. So this gives us a more refined point to look out for. So again, if we just highlight this as our POI, so all now we need to do is wait patiently for price to trail back up to this point and then look to be sellers in the market, assuming we have the right confirmation. So either a break of structure, some kind of distribution being set into the market, and then a move lower down. Now, it doesn't mean to say we can't be temporary buyers, we can't be short-term buyers, but in order to do that, what I would like realistically is to see a break in this smaller time frame protected high. So if we see a break above this, this would in fact confirm a bullish retracement. And then we can look, as I say, to be buyers into the market shorter term. Okay, now finally moving over to the AUD USD pair. We can see how I've highlighted a BOS here. This came from a bullish rally, and then we saw how price displaced. So after this extreme high was created, we had a break of structure. That was great. This confirms bearishness longer term. We then had a bearish impulse moving down, creating a low. We then had price retrace, creating a lower high. Why is this the lower high? Because the low that it went on to create actually broke the previous one. So this tells me that this is a valid lower low, this is a valid lower high, and this is a valid lower low again. So what are my thoughts moving forward? So we've had the impulse, the retracement, and impulse. What are my thoughts now moving forward? Well, we are wanting to find some area or something for price to be able to tap into in order for it to continue moving forward. So what I have done prior to recording this video is actually find an area that was left unmitigated, which was here. I will show you guys in a minute, but what we could also do is obviously use the Fibonacci box, which is something I like to do. And this gives us an area to look out for as well. So if for any reason price doesn't come back up to mitigate that area, but it comes and shows signs of a distribution or a break of structure moving downward, then we can look to get in a little bit earlier. If not, this is our point of interest, and this is what we want to see price trail back up to. Now, just zooming in slightly, we can see this area that was left unmitigated. If I just move this aside, we can see how we've had buy signals before a heavy sell-off. There was no area or no point at which price has come back up to tap into this to, clear that of liquidity. So this is a good point to look out for. Like I said before, this is an area that I want to see price come and trail back up to in order for us to look to place those longer term sell positions. So just to close this off, we could look to be buyers in the market shorter term again, like we could with Euro USD. And then as soon as price shows signs of a distribution, a break of structure, some kind of displacement in price, we can then look to be sellers in the market longer term, expecting that price is going to break this low that was set here, creating another lower low. So as a final summary, I am looking to be a seller in all three markets longer term, but we can look for shorter term buy positions. And yeah, I mean, the analysis has been quite brief. I'm glad to be back trading the markets. As I say, we placed a brilliant trade on the Euro JPY pair on Friday. It's still running in over 100 pips profit. We're looking at about 16 to 20% at the moment. So that's amazing. That's after partials. So yeah, if you're not involved in the Learning Lounge group chat, get yourself involved. It's completely free. The link is always in the description, so join that. If you have any questions for me or James moving forward, don't hesitate to message us personally or leave a comment below on this video and we will get back to you as soon as possible. If you have enjoyed the video, don't forget to leave it a like. And what I'm going to do now is pass you over to James, and he's going to run through some of the markets that he is looking to capitalize on this coming week.
Hey everyone, how are we getting on? Welcome over to my segment. I'm going to run through a top-down analysis on the Australian dollar to the US dollar this time around. I'd like to sort of deviate back and forth between how I do my Sunday sessions. Sometimes it will literally just be a really quick outlook on a couple of different markets, and then sometimes I'll actually do like a full top-down like I'm going to do now, just so you can get value in multiple different ways. I'm sure Luke will have ran over a few pairs and his outlook, but I also want to provide some educational content in terms of how I go about doing a full top down, because you have to remember that before I trade any market and on the weekends, I usually am going to do top downs on a lot of the markets I'm looking to trade, just to remind myself of what the overall bias is. And I think that's extremely important for anyone to do in order to understand what's going on. So I'm actually going to start off here on the 3 month. We'll see that we had a low set in the market. We traded up to a high. We traded up to put a higher low, higher high, and then we come and we penetrate what should have been a protected low. So that gives us a displacement, like so. And then moving forward, we can expect that price is going to make runs lower. And if so, it's likely going to continue protecting some intermediary structure. So we can see that we've had a reversal somewhere inside of this region, which we can identify when we do go lower, but just another area to watch potentially in the future are these two regions here, which could definitely act as supply zones in the future, given that we want to follow this overall bearishness. As of right now, we've not put in that, let's say, wider scheme retracement. We're still following the fractal bearishness, so our final target is all the way down here, and our protected high is back up at this point. So this is the current range we're looking at on the 3 month time frame. We have this as a protected high, and then obviously the line below is going to be a final target, like so. Perfect. Now let's go lower just to see how we can get involved in this market. Of course, it seems like price has come up. It's tapped us into something in this region. I'm not going to worry myself too much about where it tapped because we're already past that point, so we don't really need to worry ourselves. The thing that I am going to worry myself about is the fact that we have just cleared this liquidity low. So we are showing prices, desire to want to run lower and run that liquidity to the downside. So we can put that as liquidity. You can see that since we had this reversal in the market, which is a pretty clear distribution, we have this buy to sell region, which was left unmitigated. However, price does come quite perfectly to tap into that, and that tap also clears intermediary liquidity that was left over in this region. So we get a perfect tap into that buy to sell. Since then, we come to displace the low. So if we go lower again, we can expect that price is probably going to trade us back up to a supply zone before we ultimately then take more moves lower. So the reason I quite like this is because we see that the overall buy to sell in this region started here, which gets mitigated by this move. This move gets mitigated here, and then the move right here, we can see that we have an inefficient market here. No structure returns to this entire last buy to sell. So in my eyes, this is the most likely zone. Obviously we can look to refine it, but on this time frame it would act as this candle. Now as we move down into this region, we could argue that what's happened is we've had a move up, push back down, signs of continuation lower, and I'd take this entire candle as an unmitigated candle. But we see that the wicks here, we obviously have some sort of price action traders back into it. So let's go down to a 4 hour. We can see that this is definitely an unmitigated zone. This entire region, we could potentially look to refine that to the full last buy to sell, which would be that region. And then looking inside of this, this is definitely institutional control because we've had a lot of liquidity cleared by a high volume move. But the big or the major buy to sell in my eyes starts at this wick here. We have price action return to that. So we may argue that price has already actually mitigated this region. We could, just to be on the safe side, argue that potentially something unmitigated in here, but it seems like everything again has been tapped into. This gets tapped into, this taps into that, this taps into that. So I don't think, in all honesty, that there is a clear unmitigated zone inside of this point that I can really imagine price wanting to trade back up into. As I'm just following price structure, I'm seeing that pretty much everything has been mitigated. There's no clear nice zone that I like the look of. I mean, if I had to pick something outside of this entire region, I'd probably look inside of this zone here. just because we do have some inefficiency below. It seems like price has already reacted to that one, so I think out of everything, if we had to try and pick a zone out of that, it would definitely be this here. And then on top of that, obviously, we have this refined zone up at this portion. So these are two supply zones I'm wanting to see get mitigated by price. So my bias as of right now, the story I'm telling myself is obviously on a 3-month time frame. We zoom back out. We know that price is going to slowly and eventually trade us down to this final target following the laws of the market here. And we see that within this region, we had a distribution, obviously in an overbought region of the market, trade down, a redistribution. We've traded down. We've had another redistribution. And it seems like at this point in the market, there isn't as much supply as there was. Obviously, each impulse prior was very deep with high volume. And then after this, when we make that next impulse down, there's not as much volume present. It seems like supply isn't as dominant as it once was. We have still come up to follow and respect the bearishness, but once again, it doesn't seem like there's as much volatility to the downside. So I am going to be careful, even though structure tells me that this should be our final target because we are still bearish. What we could actually be seeing is that price could be getting ready to accumulate in this region. We can still sort of follow what we were looking at, but the only thing I'm going to change, because I've done a supply and demand analysis of this region in the market, and I feel like it could be likely that price no longer wants to follow bearishness given there isn't enough supply. I may therefore argue that price may actually want to come and mitigate one of the zones down here as demand. So if I had to pick one of those, the reason I'm picking this is because I believe on the weekly time frame, I believe it was on the weekly. Yeah, this is a perfect last sell to buy that is unmitigated. So just on the off chance that price doesn't want to continue this bearishness and instead we are accumulating, this would be the spring, and then we'd want to see the test of the spring, which would be this candle. So that would be demand. That doesn't really affect our bias because the bias is still the fact that we want price to trade down. So just to recap, we're hoping price to continue trading down. We have achieved all upside targets, so there is absolutely no reason now for price to actually penetrate this high here. So yes, the overall protected high is up there, but as I've analyzed structure further, there's absolutely no reason now why price should need to take this high. It may want to come and mitigate something in this region, but I've already drawn out these two zones here, which are the most likely to be reacted from in my eyes. So I'm actually going to move down the protected high to this region because, as stated, there's no reason for price to want to go higher than that level. And therefore, we can expect our new range to be this protected high down to the final target or down to the demand zone. So we have this entire region to potentially get involved with sell positions from, which is very handy for us. Another thing to note is that obviously in the scheme of bearishness, we have just recently broken that low, and we can see evidently supply is running out in this region. It seems like a wider scheme correctional wave is going to have to be put in place, and that seems to be happening at this point. So it's definitely valid now for us to be watching price slowly trade us up into one of these zones. So we can set alerts. And in the short term, we may decide that after a displacement that we've had here, we could want to or look to take long positions, riding price up into supply zone. So if we follow this structure, we've obviously had in the scheme of this bullish impulse, We've had swing high, swing low, swing high, swing low. We've got the swing high up here now. So let's take this as an impulsive wave. That is exactly what we're seeing here. So then go down to a 50-minute and decide, is there anywhere that is unmitigated in this region? Now to me, that's probably going to act as a point inside of here as a demand zone. If that fails to hold, okay, maybe we could argue that we have actually seen, or we have left some unmitigated positions in this region. So we could look now to trade price bullish up into these points of interest. So that is my bias. Obviously longer term, my higher time frames, we're expecting price to trade us up much lower. But for price to get that much lower, we need to introduce supply from a supply zone, aka one of these two areas drawn out in the market. Of course, we could just wait until that point, or we could try to find ways to be involved in the market in between that, which in my eyes, after this displacement, that would be price trading bullish into one of these zones. And following the most recent impulsive wave, we have two demand zones that price could react from. We've already tapped and reversed from the first, so we're either going to make this move higher now, or we might tap down, tap into this zone and make the move higher then. So that is my overall outlook on the market. Definitely one I'm looking to trade in the coming week, given that price gives us some volatility and some price action that is tradable. The one thing I'm hoping to see is just the break of this high, just to confirm that we are making a new move higher, and if so, I think plenty of trading opportunities will be presented. But regardless, thank you everybody for watching this Sunday Sessions video. If you enjoyed, make sure to like the video, leave comments, subscribe, all that good stuff. We do a few live streams every single week, so if you aren't subscribed with the notification bell, make sure to do that so you are notified when we go live. No schedule to that, it is quite random, which is exactly why you need that bell on. And if so, you can actually watch me or Luke trade in the live markets. But with that being said, once again, thank you for watching, and we'll see you next week in the next Sunday Sessions.